Hope everybody can hear me. So I'm going to do this presentation a little bit differently to the past, in that we've done a lot of technical webinars and so forth on EDM with Red Cloud and with some other groups in the detail. And that's like an hour-long kind of presentation. It's pretty long. But what I wanted to do today is to essentially show you why I came into the company. So we had, I came across this company that was had a $3 million market cap. It had an asset in Nova Scotia, which has previously been in production, as Tim said. And it's basically been mothballed for, I guess, probably about 10 years. They had no market traction, no feasibility study, no mineral reserve, and the project really wasn't in compliance with Nova Scotia. So I was brought into the company essentially to look at it on behalf of shareholders and do a due diligence on the asset, on the company. And I reported that back to those shareholders. And that was a pretty extensive due diligence, looking at the corporation, looking at the mine, the previous studies that they'd done before. And I could see it was an opportunity. There was opportunity, some low-hanging fruit, if you like, and some obviously hard work. You know, to get a mine back into compliance, you can't just do that overnight. It takes time. So when I joined 3 years ago, in August of 2019, I presented a change plan, essentially, to the company, and essentially a 4-year plan to fix the resource, fix the company. The company also had something like $400,000 in debt at the time. And as I mentioned, it was at a $3 million market cap. So the first thing we did was bring in experts, and we looked at the mineral resource, and we did a 43-101 mineral resource, which actually resulted in an increase of the resource, the mineral resource measured, indicated, inferred, by 2.6 times. So we went from 11 million tonnes up to just over 30 million tonnes. Incredible, right? And I put out a press release on how is this possible? And so we did that press release, I think it was in November, 2019. So that was, while that was happening, I had Ausenco come in and look at the plant, look at the mill. And to see forward-looking statements, I'm obviously going to make some. And I just want to go to the project, essentially in Nova Scotia, just so you can listen to me what I'm saying in terms of how I got here. So a new mineral resource, 2.6 times. The previous company could have done that. We compiled all the data. We found certain emissions in the data set, and that led to a 30 million tonne resource. And that gave me confidence that maybe there's some mineral economics here. So that's worthy of going to the next step in terms of feasibility analysis. Ausenco came in, looked at the mill. It's a huge structure, 4 stories high, basically, metal, steel, ball mills, flotation circuits, basically just sitting there mothballed and idle. And I said to them, is this just a steel that we're going to sell and wind up the company, or is there a real opportunity to do something with the resource or with the mill as it stands? Maybe bring some mineralisation in, which is what a company in the past did. Seabright, they trucked in gold and ran it through the mill. But otherwise, it's basically been sitting there. So their work on the mill gave me confidence that we should kick this into a pre-feasibility or a feasibility study, which we did. And we announced the results of that in July of 2020. And that was the first ever 43-101 NI 43-101 mineral reserve on the project. Incredible, right? And those results demonstrated some very strong economics. You can see here, this is an updated pre-feasibility, but an NPV at 5% of over 200 million. Even when we did the study, 5% interest rates were about right. Now it's about 8% effectively. So we've still got an NPV of over 150 million. So that was a very robust economic. We looked at the long-term zinc-lead price, and we're very conservative in that. Very conservative in our selection of equipment and what we're going to do. We needed $30 million to get it up and running. And as you know, the pandemic was a bit struggle. So we did an updated pre-feasibility study, and we added in gypsum. So we mined through gypsum in order to get to the lead and the zinc. So that just basically adds another revenue stream. So my point of all this is, as I laid out the plan to the company 3 years ago, all we've done is systematically check off these things. We did the resource update, we did the reserve, the PFS, and then importantly, we secured the finance. So we secured a finance with IXM SA. They're a Swiss-based or Geneva-based company, and they're providing a loan to us for $24 million US, which is sufficient to put the project into commercial production. So that was a major milestone, not only fixing the company, fixing the asset, and then getting it to commercial production, or to finance it to commercial production, which is where we're at now. So since that time, now zinc's become a critical mineral, used in EV. I don't think you listened to the presentation before, but zinc is also used in that process. It's used in industrialization. Zinc plating is used in construction and industrialization. So it's a growing metal. And so we are looking at our forecast. We're in the right spot in terms of long-term stability and pricing. And this is where the economics of the project comes in. So it's a very low-cost project. It just needs $30 million to get it into production. We have that. We're going to raise a little bit more money in the next 6 months or so to have a bit bigger war chest, just in case there's anything to do with inflation that we haven't considered during the initial startup period. We're also looking at capital, the capex reduction from 30 million down to about 25 million to reduce that burden as well. So it's looking very good for commercial production next year, and our first quarter has a free cash flow of $5 million. That's quarter 4 next year. Then the subsequent quarters into full commercial production, the revenue, free cash flow is $7 million Canadian per quarter for 14 years. So this is a low-cost operation with a 14-year mine life that just basically makes between $15 and $40 million a year. Yep. So I think that's probably the essence. You can see the more technical evaluations in the slide in the full package. But it's a unique land position. We own the land. We own most of the property. You can see in the picture there. It's permitted. I met with the government yesterday. They're very excited about this, and we expect to have the mine in operation. The trucks, I guess, are hauling next summer, and then in commercial production roughly 3 months after that. So it's a very good story, I think. It's close for logistics to Halifax. We have power. We have all-season access. It's just near the airport's just in the background there. It's really set up for a long-term mine life, and essentially sustained cash flow over a number of years. So this is a summary of what I was trying to do before. If anyone, there's a big takeaway here, is essentially we're trading 10% of our NAV. So as we go through towards commercial production next year, we expect that to improve. Our goal for that is essentially 40% of NAV, which would be a market cap of around about 40 million, and arguably still well below our market peers. If you look in the full presentation, most of our peers are between 90 and 200 million for this style of operation. So I believe we've fixed the resource. We've brought a very credible offtake partner into the play, which is essentially for 10 years. Their due diligence was over 2 years, and you can imagine it's a considerable amount of work to make sure that they're comfortable in terms of loaning that money to us. But also they get the offtake for 10 years. So they buy the lead and zinc concentrates, and we get the revenue from that. They're a big company, of course, based in Geneva, as I mentioned, and they have big, deep pockets, and their purpose is to get the highest value for the zinc and lead concentrates that they can. Of course, and the last component is the gypsum. So we have an offtake with a local Cape Breton company, and gypsum's also increased in value as well. So it's gone from $8.50 US a tonne to $9.50 US dollars a tonne. So that's not included in our past economics either. So there's a lot of other opportunities that we can see going forward. A lot of opportunities just in terms of improving the value of the asset through green power, ore sorting, and updating the gypsum to a specialty product, which we're looking at as well, which would add in another millions of dollars NPV into the project.